So going into the weekend, I will be kind of weary. Just me personally, I am short going into the weekend, as you can see by if you come up here and look at the top. If you look at where it says Delta, you see that -9. That lets you know that my overall position is short going into the weekend. If it was positive, if that negative number wasn't there, then that will let you know that I am bullish going into the weekend. So my overall portfolio is bearish. Um, excuse me. I have positive theta, and I am got a negative vega. So basically, if I was if I was positive, if my deltas were positive, then volatility and increase in vol would bother me, right? If vol goes up, it'll help me because I'm short. So most of the time when you're trading equities, if volatility goes up, then the market's going down. So if you have a bearish portfolio, then that doesn't bother you. But if I was long theta, which is this, which I am, and I also had a long portfolio, then an increase of volatility more than likely would hurt my account. So for the most part, um, I'm positioned for some downward action. And you'll see out of the 4 positions I have on, well, this one is a closed position in the video. I scalped it. So like earlier, not even that long ago, maybe about, let's see if I can pull it up real quick. Probably about, I don't know, an hour ago, there was news that Nvidia had got hacked, and look, and I mean it ran after that. So I bought a put. So they'll let you know I actually bought the put like right here. Like the news came out. So I just jumped over here and bought a put. And then it jumped down and then I got out. It was just like a quick little scout. And then look what happened. It's a good thing that I did get out. And so that's how I racked that little $63 right there. And that pretty much saved me from having a red day today. So that was that. That position is in. Oh, so if I take the closed off, that position wouldn't even be on there. So what I have open, I got a short position, a short put spread in the Qs, got a short put spread in AbbVie, and I have I'm sorry, long put spread. So I mean, I bought it. I bought a put spread in the triple Qs. I bought a put spread in AbbVie, and then I sold a credit spread in the SPY. So we'll take a look at that one real quick. So basically, I sold the rally. So we got a rally in the SPY. I'm gonna go back out and go to the daily so you can see. I want to get this out the way. So basically, I sold this. So we got this update right here, right into what I would call resistance. This would be resistance for me. This area right here. Let's see where you at. This would be, so right here. This little area right here. So for me, you see what this wick is right here? What it's like, spinning top? I think that's what they call it, or a little small, or a hammer candle. That hammer candle pushed up, and then we had a breakdown, so we got right back up into that area. So I sold. So I sold the credit spread right here. We'll look at it right. I came out 48 days. It's at a 27 delta right now, but when I sold it, it was the 24 delta. So I sold, came $5 down, and then bought a call, sold a call, came five. So it's a $5 wide. I collected 118, and there you go. And so this is where I'm sitting at. Going into the weekend, I wanted to be short because of the news. But look, I don't know anything. We could come back next week or on Monday and boom, either Sunday night, when the futures market open. I just think that lately over the weekend is when we've been getting all of our news, they've been hitting us with all kind of news going over the weekend. Then you got to come try to scramble with your account. Man, bump all that. So that's where I'm at here. Let's take a look at the SPX, and we can kind of plot out like next week. So I'm gonna come to the options, the option chain and the SPX, S&P 500. So the SPX, there is no stock, it's just straight options. And this is where your VIX comes from. Your VIX measures right around 30 days, between 23 and 37 days, right around that area is what your VIX is measuring, the vol on the SPX. So if we go 7 days, this will be next Friday. We got an expected move of 100 and it just increased. We'll see it moving over here, 108. So we got to expect a move of 108 points up or down. So, pretty good risk, pretty good risk. And you can see the market actually is making a little move here towards the end of the day. And my Twitter account is going off because I follow certain things on Twitter. That's how I get these alerts. You can set up to watch certain tickers on Twitter. And so when anything comes out with that ticker, then it'll pop up, on your phone or whatever. So as I got that news, I follow some stuff on Twitter, got some news. Nvidia had been hacked, came in, bought a put, a little quick, little scoopy, a little some tendies real quick and got out. So let's take a look at I do want to talk about Tesla just a little bit. So I think when you look at the SPY has been up today, which is S&P 500 up. The Dow is up 2%. IWM is up 2%. So with all that being said, you have the major indices up, but Tesla's not up. So Tesla is not really up. Then look at Tesla. This is like a little doji candle. It's not moving with the rest of the market. I think that's telling right there to me. That's saying something, right? I'm not saying it's bearish. I'm not saying it's bullish either. But look at it. Look at the MACD stand flat, not really curling up like the others. So yeah, I'll be watching this going into next week. I actually thought about getting short right here, but I don't want to. I'd like to see it get up a little bit more before I short it. There's a lot of risk out there. Like I said, you got the SEC is investigating Elon Musk. I don't know if they're investigating him formally or they're probing, whatever you want to call it. They're looking around to look and see. I think him and his brother maybe talking about those when they sold all those shares. When they sold all those shares and started all of this, if you ask me. And so, and you got a lot of chart patterns in here. I may do a video this weekend, a little small, little 15 minute video just on chart patterns, because you got a harmonic pattern right here. And I can't do that on Tastyworks. They don't have the charting package to be able to put that on, but I can show you that in Trading View. And then you got a head and shoulders right here. Shoulder, head, shoulder. That's a reversal pattern right there. So when people are saying Tesla gonna go to the moon, I mean, you got a reversal. You got two of them right here. From here to here, you got two patterns. There's the bell. So the market is closed, and the market rallied into the close. So hopefully people who are down this week got an opportunity to either sell some of your stuff, get some risk off, and get comfortable with your risk. And overall, even if you own stocks, you can sell calls against your existing positions, right? Do some things to don't just sit there like a deer in the headlights and then just take it. I don't understand that a lot of times. Um, I'm in a group chat, and so and in the group chat, one of the one of the guys in the group chat put something in the group chat. So, I'll talk about it on here. This is like an opportunity for me to do like some blogging. Um, that's what I kind of like about this platform, about YouTube. So let me read the what was posted in the group chat, and then I'm gonna go over it. So this particular person put 70% win rate in option trading by utilizing different premium collection strategies. One of them is Iron Condor with 45 DTE days to expiration, 30 delta, 50% profit, and IV over 70. So what the person was saying was, so I could model that out pretty easy. The only thing about that, you can set up whatever percentage win rate you want before you even do the trade. Like, you can do that with options. That doesn't mean now at the same time, what are you going to do about the other 30%? So basically, let me go to, let me find something that has over a 70 IV, which is what this person said. So let's look at, excuse me. We can pick any one of these. We can look at, let's look at Target. Got Target right here. Target, let's see. Target has a 75 IV rank. So let's look at Target. Let's see if we can set this up with Target. Come out 48 days. If I sell the 175 by the 170, and the reason why I want to do this, I want to talk about it a little bit. I'm going to sell the 14 delta and buy the 8. So what does that give me? It gives me a pop of what? 66%. So let's move it a little bit then. Let's move it. If I move it here, what does that give me? All right, 70% pop. So I got a 70% probability of profit. Now, the thing about this is you're collecting 83 cent worth of credit for this particular spread. And which means you have this isn't gonna work because I just now noticed this is $10 wide. So let's cut this out. Let's get one that has more strikes. Let's see. Because I want to show you the downside to creating a high probability trade. You can create whatever you want. You can make the numbers say, let's go to the bonds, TLT. 48 days. Let's go 16 delta by the 7. Let's come over here. Let's go 14 delta by the 7. This is an Iron Condor with a 73% probability of profit. Look down here, the bottom left-hand quarter, how I set this up. And I actually have 87% chance of getting 50% of this. But the max loss is $428. So I'm only gonna make $72 if I get max profit. And max loss is 428. And then if I can raise my probability of profit if I hold it just to get 50%, $36 out of it, right? That improves my probabilities up to 87. However, you're still at some point in time, you'll take a loss. So you have to manage your losses. It's just not as easy as just setting up a trade to get a certain probability. Because remember, if it's a 73% chance of me winning, that means that there's a 27% chance that I could lose. So 73 out of 100 I'm going to win, 27 out of 100 I'm going to lose. And those 27 out of 100, there your max loss is 428. So now you got to see. So now you have to you not only do you have to manage winners, you have to have a plan to manage the losers as well, because you don't want to be taking max losses. It's and I only wanted to talk about that because I ain't to go back and forth in the group. wouldn't probably be able to make sense about sending messages back and forth. But by doing this video, people can understand that you can set up whatever. Like, shoot, you can do a strangle in here. Now, a strangle is similar to an iron condor. However, you don't buy the wings. So you just sell. So if I wanted to just I just sell this 16, come over here and sell this 16. Now I'm right out here at 1 standard deviation. I actually will collect more credit because I didn't buy the wings. So if buying the wings would be buying that call, buying this put, that's an iron condor. If you just sell out there, take the wings off and don't buy them. And you say, well, what's the difference? Now I collect more credit. I'm taking on more risk when I do that. So I can make more money for my risk, right? And I have a higher probability of profit because I didn't buy those wings. So these I will put it like this. This call and this put that I've sold they will decay faster. Or shall I say, this trade has the ability to decay faster without the wings. And so this is an undefined risk trade. Whenever I buy the wings, I'm defining my risk. So like basically, they're only gonna margin me 1850, right? Buying power reduction. But max loss, you see down here, doesn't have anything, right? Because I didn't define my risk. I can come over here and define my risk if I want. Now I can make the wings real far out. Buy that 156. Come over here and about a 118. Now I got $10 wide and I'm taking in a buck, right? So it's similar. Probs are similar, but you see the buying power change and you see the max loss change. That's because I defined my risk. So that you can set up, I could set up a 99% probability of profit on a trade. Let's go out further. Let's sell the 10 delta over there. Let's come over here and sell the 10 delta over here. Where we at? 84% probability of profit. Let's come down here and sell the 5. Let's just go 2 standard deviations out. I don't know how much money you're going to actually take, but all right, look at that. Got a probability of profit of 97%. I'm only going to my max is only $58. But you see how the wider I got, the higher my probability of profit went up. In trading options, you're defining your odds, right? And the more you bring them in line, like evening them out, the more money you'll make. But when you want to tilt it and make it to where you have, like I got now, a 97% probability of profit, you say, well, why won't people do that all the time? You win 97 out of 100 times, possibly. You're only making 58 bucks. And that's if you hold it for 48 days. You manage this at 50%, you making what? Like, we'll call it 30 bucks, right? But you say, well, man, I'm gonna win mostly all the time. But those 2 or 3 times when you lose, look at look at the risk. There is no max loss on this trade. So if you come in Monday morning and look up and now China is in the fray with Russia and maybe they over in Taiwan, right? And the market is going ape, you know what? And you come in and instead of bonds being at 136, you come in Monday and the bonds are down here pushing at your put level. So that's what I'm talking about. Yeah, and then the losses, that one loss, that one hammer, the time when the hammer gets dropped on you could outweigh your wins. So that's one thing to keep in mind with selling options and doing and making option trades. I very rarely do a whole lot of strangles. If I go naked, I like to do puts. I like to do puts and maybe like cheap products or whatever. Um, but not that I won't do them. I think you can get the same benefit in doing if you do a strangle and make it a wide iron condor, like I just did. So you would sell maybe the 130, right? And then come out here and buy a $10 wing like that. And then come over here and then sell the 144 and then buy a $10 wing over here. So I collected 165. I defined my risk. Max loss is 835. And I still collected a buck 65 in credit. Probability of profit is 66%. I'm right in my, right around that 66, 67, 68%. And then probability of 50% of this is 82%. So that's that right there. And one of the ways that I like to use how I choose my strikes, like everyone chooses their strikes differently when doing iron condors and doing strangles or doing selling options or even buying options. I like to use if I'm doing an iron condor, I generally try to be wider than this ruler. That's just because that's the expected move. So most of the time, and this right here is the only place I know this is on Tastyworks. I like to be so the expected move is like the move that's priced into the option market. And Tastyworks has their own way of doing it. And so for this particular expiration, it's $6.35. So I like to come out here and be wider. You can do $5 wide, and I want to be wider than that's the expected move. And so I would be taking in 124, and that would be that. That's how so for the most part, I like to be wide. I like to sell the expected move and then make the market beat me. Right. So at this point, I don't really care about the direction. I just want the market to bounce back and forth in between my strikes, in between my short strikes. And this has a high IV rank. And when you're doing an iron condor or strangle, either or, anytime you're selling options, you can get paid by the market not moving or not going against you. And you can get paid through time decay, just time passing, and you get paid by decay of the option. So if the IV rank was to come in, if the IV, if implied volatility starts to revert and comes in, you'll see this expected move start to shrink. And as it shrinks, the price of these options will get cheaper. And thus what you collected will dwindle. So like if you collected 124, you'll be able to buy this to cover it, to close it at a cheaper price than it was when you opened it. So I hope you guys got something out of this little premium selling session, talking about iron condors, talking about strangles. I'll talk about buying some options and how I like to choose. I actually did buy an option today. I actually bought a put option in another portfolio in the SPY, a long dated put option. I'm betting on the market going down even more, right? Um, so I'm gonna save that for another video. So subscribe, hit the like button, so then that way you'll get notified when I do these videos. I like to do them when they live. I had some difficulties at the beginning of this one, but that's what it is. I like to do things live when the market's running and going. So talk about what's going on, what's relevant to you. And with that, guys, I'm out. Peace.